Welcome to tonight's discussion, The Psychology of Successful Trading, Mastering Your Mindset for Market Success. I'm Owen, and I'm thrilled to be here tonight alongside Pat Walker. We're diving into a topic that's not only crucial for traders, but is often overlooked, the mental side of trading. At Mission Winners, we believe that mastering your mindset is just as important as mastering your charts. Tonight, we'll unpack the psychological principles that drive smart trading decisions and help you position yourself for long term success. Before we dive into tonight's topic, let me take a moment to introduce someone who needs no introduction to many of you, Pat Walker. Pat has been in the markets for decades and brings an unparalleled depth of experience to Mission Winners. He was a co leader for Investors Business Daily for well over a decade, sharing the stage and teaching concepts inspired by William O'Neill himself. Pat's passion lies in educating traders. His focus isn't just on what to trade, but why and how, ensuring you understand the mindset and the strategy behind every decision. He's known for his commitment to discipline, clean chart setups, and relentless focus on managing risk, which is the cornerstone of everything we teach here at Mission Winners. Tonight, you'll hear directly from Pat, but first, I'll kick things off with an overview of the psychology of trading and why it matters. After that, Pat will share his insights into managing emotions and cultivating discipline in the markets. Let's start with the basics. What is trading psychology? Simply put, it's the mental and emotional framework that influences your decisions in the market. Fear, greed, hope, and regret are emotions traders struggle with most, and they can derail even the best trading plan if left unchecked. Here's a question for you. Which emotion do you find the most difficult to manage? Fear of missing out? Is it greed? Is it greed that keeps you holding on too long? Drop your thoughts into the comments. We'd love to hear from you and know what resonates with you. The key takeaway here is that understanding these emotions is the first step to overcoming them. The market is designed to exploit human emotions, so recognizing how they influence your decisions gives you a huge edge.
Thank you, Owen. I appreciate that. It's a good introduction with what we have to talk about. The area I'm going to discuss, and it's my background big time because I have degrees in it, emotional control. Folks, I'm going to cut right to the chase. Our biggest foe is what greets us in the mirror every morning, emotional control. So we're going to talk about how to manage those emotions, how to manage yourself when they come up. It's critical because trading can be intense. And folks, we have to put this in context. We're not just looking at charts on a screen, okay? There's numbers associated with it, but it goes far beyond that. It's your numbers, it's your account, it's your money. The market moves fast, and without a structured approach, it's easy to let emotions take over. The first strategy is to have a daily return. I can't routine. Folks, I can't stress that enough. I have a daily routine. I've had a daily routine since the last century. We start every day with a clear plan. We call that the key list. We make a key list every day at Mission Winners for our members with a video explaining in depth what to buy, where to buy it, when to buy it, what to look for, price and volume. And we use that as a roadmap for people to follow. You know what's the best part? It helps reduce uncertainty and it keeps you grounded. We're eliminating all the emotional factors that can cloud our thinking and judgment. And I like that. Another good point is this. We focus on the big picture. I encourage all this. Don't get all caught up in reacting to every little tick. I have not looked at, and Owen and Rich know this, I have not looked at a 5-minute chart this year. Okay. And I rarely look at 10-minute charts. Instead, stay disciplined and stick to your strategy. As we always say, the market doesn't care about your emotions. It cares about our actions. Okay. Keeping it cool under pressure is what sets great traders apart. And I'll tell you, this is important. We have a plan. We know what to do. We know what to look for, and we know when to do it. If you can do that, you'll be light years ahead of most people.
Okay, let me jump in here for just a second. Let's take a look here. How about let's take a look at Texas Roadhouse.
All righty, here we go. I thank you. There we go. Ooh, that's a good one. Good. Excellent. Folks, by the way, we're just laying this out here for education to help speed it up for you. Here's Texas Roadhouse. And again, we like charts that are in simple flat bases that are easy to see. And look what it does here. It lifts up and approaches that base on a big pickup in volume. And the next day it pulls back. It ran up to the line and it backed off of it. Okay, so it didn't trigger. You can see the clean tops. Really put this in your toolbox, folks. Simple bases. Owen saw it, other people saw it, and they bought it. And you can say, how can you say that? Because it went up on good volume. It took money to move the dang thing. And it did right here, pushing above these simple tops right here, and it lifted up. It marched up, and this is a good lesson. It had a good march here, but notice as it lifted up, what was happening? And these are the things we teach in Mission Winners. It's going up on decreasing volume. The power was drying up, and then it pulls back. Okay, but follow this, folks. When it falls, look at the volume. There's not a lot of selling pressure there. The selling volume on this bar is less than the buying volume power on those bars. And then it lifts up again right off that moving average. And what is it, folks? The ADMA. It wiggles around a little bit. It comes down to the pivot, but it doesn't fail. It also fell on low volume, and then it just based and meandered on. And then look, it starts to pick up on a slight pickup in volume, still going sideways. We didn't rehearse this. I'm just doing this real time right here. Goes across right in here. And look at the volume on that bar, folks. I'll say it again. People talk with their mouths and vote with their pocketbooks. They voted right there. Marched up, man up, started to fall a little bit, and now another valuable lesson. Charts are made by people making decisions. Everybody knows about the 50-day simple. Everybody knows about the 200-day simple. Everybody knows about the 21, well, we do, the 21-day exponential and the 8-period exponential. And I explained that earlier with us. It comes up, it falls through the 8, but it finds support right at the rising 21-day. And watch this. This is worth your time. Oh, it pulls back. Volume's less than average daily volume. That's not too bad. It's found support at the 21-day. Gosh, it found support here and lifted off. Maybe it'll bounce off here, right? You have a plan. You know what to do. We teach this in Mission Winners. We always have a plan. Look at the volume pickup on that bar, folks. They voted. Volume on this bar is more than double the previous bar. In fact, on this bar, 539, it's almost triple, bouncing off the 21-day exponential moving average line. There's a lot of research in that moving average, too. You can say, what, weeks? Years. And then you get the payoff. Meanders up, and what can you do? You could sell a little bit into strength if you want, and then it gaps up, most likely on earnings, and it's trended. There you go. And look at the trend of the ADMA. That is how money can be made without having to be chained to your computer screen. You don't have to watch it. I have charts. Through the years, I've had charts. I don't even have them on my front page. I've got alerts set. I don't have to look at them during the day. Just let them work. Is there another one you'd like to look at, Owen? Anything hit you?
Let's just take a look at one more because I
Sure.
like the trend in it. Let's take a look at EAT, EAT.
All righty, here we go. Okay, I'll type. Oh, here it is. Excellent,
And
excellent.
if you want to draw a line there,
Oh yeah,
the entry line is right about 72. We'll call it 72.
I got you. You know what I call that? Sweet potato pie. There you
Right?
go. Just
That's nice, isn't it?
that is. Oh, isn't it funny? Sweet potato pie, and the name of the company is Eat. Did we plan that? I don't think we did we? No, I think it's just I'm a little crazy with stuff. Anyway, but I'm always thinking about food. But look, folks, look at that simple trend line. If you have to look for it, and this is what I taught at IBD meetups for years, if you have to look for the pattern, it's probably not there. Same thing's true with a trend line. And also notice how It's marching up. There's the trend line, but also note how that baby's marching up the ADMA. Look at that. Comes right down to the ADMA and bounces right off of it. Fact. Trends pay more than all the decisions you will make. So therefore, by default, and it pays more with less hassle. You don't have to make any decisions. By letting it work, you can sell a little bit into strength, which does something very important, folks. From and I got a degrees in psychology too, okay? What's going on between our ears is the biggest part of the game. You take a little bit off, you've guaranteed yourself a profit, but you've also lessened stress, which leads to clearer thinking. And then you just let it work. I've had many stocks, and Owen knows this through the years. I don't even have them on my front page. I don't even look at them during the day. I'll have an alert set. Maybe I'll look at them once, but I just let them work. Just let them work. And see the trend here on the ADMA, the white trend line, but also the ADMA, which is the yellow. It works. And I'll do this for you just to make this easier. I took that line off. There's the moving average. And again, that is the 8-period exponential moving average. Not simple, exponential. And there's years of research in that too. But there you go. And Owen's talked about that. He owns it. And it's trending. It's working. Now, I want to state one more point here that's crucial. There's a lie on Wall Street. I didn't say line, I said lie. You'll never go broke taking a profit. That is an outright lie. I'm saying it again. If your losses are bigger than your profits, you will go broke. So therefore, by default, what do? As Owen pointed out here with the stock he's got, he let it work. It's working for him. Let it work. Where's it going to go? Maybe it'll stop tomorrow. Maybe it'll go on through the end of the year. Why limit? Limit losses, don't limit profits. And that will help you. This is a great example of riding a trend. And again, that's the 8-period exponential moving average line. So good questions. I thank you all. I hope that
You know what? Let's take a look at one more, can we?
I'm too busy. I got things to do. Let's do it.
Let's take a look at
Sure.
Reddit. Let's take a look at Reddit.
Reddit. Red. I like red. Here we go. Reddit had a simple base breakout back here. And by the way, folks, we didn't rehearse this. Owen asked me. I don't have it up in this list up here. But just take a look. Look at the, what did it do here, folks? It's walking up the 21 EMA. But look at the trend up the 8 EMA. And I'll make this bigger for you so you can see it. There you go. It just, you just let it work. You know, we don't get sloppy and we don't get complacent, but it meets the criteria. The stock also has, this is an important lesson for all of you, and I taught this again for years. You will dramatically improve your investing results if you focus on stocks with a composite rating of 88 or higher. Okay? I mean, what I just said there is gold. It's gold. There's years of research in that. And yeah, I was in the beta test group. They invited me for the original market search product, so we know how to kind of move around with it. Anyway.
Okay, 1 second, Pat. Before I forget, I wanted everyone to know about our Black Friday sale. You can save 20% on an annual membership starting right now. But hurry, this won't last long. You can find the link in the description or go directly to missionwinners.com and choose the annual membership. We have a great community of seasoned investors, live sessions on Discord twice a week, live buy and sell alerts, and much more. So what are you waiting for? Besides the video to be over, of course. Head over to our website, missionwinners.com, and join us today. Oh yeah, if you haven't, please do hit the like and subscribe buttons. Okay, Pat, let's do a few more stocks, and then back to our main discussion.
This is an important foundation. Charts are a reflection of human emotions. Fear, greed, panic, complacency. One of my degrees, advanced degrees, is in psychology, human psychology. Charts, again, are a reflection of emotions, which naturally by default is psychology. We are looking for chart patterns that consistently happen. We want high probability setups, and we are looking for a space in the charts where it's just going sideways. Again, charts, human emotions. It's a tug of war between buyers and sellers, and we are looking for an equilibrium point. Think about this, folks. That's where the tug of war, it's a match between buyers and sellers. It's just going sideways. Nobody's winning that battle. Buyers aren't winning it. Sellers aren't winning it. And this is a classic example. We're looking here at app 11. And if you've noticed, it's just going sideways. This is a daily chart, by the way. And it's just going sideways. It's a tug of war between buyers and sellers. And then finally, right here, look what happens. The buyers overtake the sellers. Look at the lift across these tops, and I've drawn the line, and note the volume pickup on that bar. A massive volume expansion. What happened there? The buyers overtook the sellers. The buyers won this tug of war, and it's reflected in price action, backed by good volume. We want volume. I want you all to remember this. Again, volume tells us other people see what we see, and they're buying it. I'm going to do something to really help you. And I used to do this at the IBD meetups. It's just going sideways. It's a tug of war. This is a daily chart between buyers and sellers. We wanted to take out these tops, and we wanted to take out these tops with volume. And it does. Note the volume surge. The buyers overtook the sellers. It's all reflected in charts, price and volume. And then you get this. And they all don't do this, I'm going to say that. But a buy here from, we'll call it 97 up to 330. That's a triple, folks. That's more than a triple. The stock had great earnings and our great sales, but most importantly, it also had that simple chart pattern with volume surging through the simple base pivot right there and taking off. There's one example. I'd like to show you another one, and you can study this. In fact, I encourage each of you, let's personalize this for you, not about me, it's about you. Pull up the chart yourself of APP on your system and study it. And even better, slide it back before it broke out and study it and say, this is what I'm looking for. Commit to this. In fact, I will tell you this, and all my members, VIP members, know this. If I only had one setup to look at, it's a simple flat base. Just a tug of war between buyers and sellers. And finally, the buyers overtake it with volume, and they've won that battle, and it goes. There's an example. I'd like to do another one for you. Netflix. This is a shorter base, and I'm going to make it a little bigger so it's easier for you to see. It's just going sideways. It's a tug of war between the buyers and sellers. And finally, on this bar, it takes out the top, and look at the volume pickup. On this bar, the volume was 2.2 million shares. On this bar, it was 3.7 million shares. It's almost double. They voted. People talk with their mouths and vote with their pocketbooks. They voted on this bar right there, and you get the march. You get the march. That's exactly what we key on. If you can do that, you will dramatically improve your investing results. Many people feel, oh, we always have to be doing something. We actually do. We have to be practicing good discipline and waiting for the right setup. And again, the right setup, simple base. A lot of people talk about the cup and a handle, and that's great. And I was an IBD meet co-leader for 12 years. If you wait for the cup and handle and only do that, you'll starve to death. They don't happen enough. You have to find a couple of other simple base setups that will help you in your endeavors. Here's another example here. Shopify. It's just going sideways right here. And look when it starts to lift on a pickup in a volume across these tops, and then it makes the march. And so you're buying it here, we'll call you buying it at 85, okay? 85 up to over 100 in a relatively short period of time. But the key point is this, not the big move afterwards, knowing, studying the base. And I taught this for years at the meetups, and I teach this at Mission Winners. Well, it's just kind of a flat base there. Oh, there's a little volume coming into it, Pat. I can kind of see that, maybe. Let's see what it does. Well, look, it picks up. Oh, look at the volume pickup on that bar. People saw what we saw, and they bought through those simple tops, simple flat tops, and we did too. We did too. And what do you get? Then it had earnings, and you get this. And that is from 84, we'll call it 85, 85 up to almost 115. That's good money. But the key point is this: it is a simple base pattern that everybody can see. We'll do one more just to stress the point. I teach this all day long at Mission Winners, trying to train our eyes. Spotify, it lifts up and then it just starts to go sideways. And there's clean tops right here. Now, this is a great chart reading lesson for everybody. And we teach chart reading all day, every day. It's going up, and then it pulls back on less volume. Oh, then it starts to bounce off the 21-day moving average, and it does it on a pickup in volume. Oh, look at that volume pickup. I guess other people are seeing this. Maybe if it takes out this top, that might be a good buy. And it's just simple tops, folks. It's nothing fancy. And if you've noticed, I don't have any oscillators on here or anything like that. Price and volume, learning how to read it. We teach it at Mission Winners all day, every day. Will help you make better investing decisions. And then it pushes up. Look at the volume pickup on that bar. On this bar, the stock did 2 million shares. On this bar, it did 2.7 million shares. That's a massive increase. It rests here on decent volume, and then it starts to make the advance on a pickup in volume. Then it had earnings come in it, and this is where we're in. So there's a buy right there. We'll just call it, let's call it 395, 396, up to 480 something. It's almost 100 points, folks. It's simple. And note the trend. I need to focus on something that will help all of you. It has to do with moving average. And there's a tremendous amount of research in these moving averages. The person who had a profound impact on me on that 8-period exponential moving average was a man who I had the great pleasure of meeting with and talking with one-on-one, Ed Sakota. He uses the 5-period exponential moving average. I found that was too close. His is in commodities. I found it too close for individual stocks. This is the 50-day simple. This is the 21-day exponential. And this is the 8-period exponential moving average. There is years of work in that moving average. But if you focus on things that are easy to see, it increases the probabilities that you see it, but it also increases the probabilities others see it. And isn't that what we want? Something that's very important to remember is fear and greed are two sides of the same coin, and they're both powerful, and they really can mess up our emotions. So it's important that you do things to minimize fear. You got to keep it out of your trades. The best trades, the best investments are one where you're not operating under a foundation of fear. The same thing's true with greed. If you start thinking about the money, which is directly related to both fear and greed, it will derail your thought processes. Don't think about the money. Think about the plan, a disciplined plan, and think about applying it. If we think about the money, it clouds our thinking and judgment. And some of the ways that will really help you is to use stops, like a sell stop or a buy stop. Let the computer make that decisions where you don't have to think about it. Always looking for a clearly defined entry and or exit point when you need to exit a trade. Entry and exit rules are compulsory, and we teach this all the time, real time, and via video at Mission Winners. Less emotions leads to clearer thinking, clearer judgment, and the tactics we use help in that realm. The key is consistency. Follow your rules, all right? And we teach rules all the time. Trust your analysis. Don't let fear or greed push you into different areas or impulsive decisions. Have a plan, a proven plan, and we teach proven plans all the time, and it will help you. And the good part is this: when you have a plan already laid out, it lessens decision-making stress, which also lessens emotions. You follow your rules, you trust your analysis, and you don't let fear or greed push you into like an impulsive area, okay? Which also leads to an important point. Run your race. Don't get wrapped up with everybody else is saying, okay? Consistent execution beats emotional decision making every time. That's a key foundation.
Thanks, Pat. Let's build on that idea of discipline. Discipline is the foundation of successful trading, and it starts with a plan. At Mission Winners, we emphasize the importance of pre market preparation, getting your mind ready for the trading day. Another essential habit is journaling your trades. Writing down what you entered, how you managed, and why you exited helps you identify patterns and avoid repeating mistakes. It's one of the most powerful tools for staying disciplined and improving over time. When you combine these habits with the tools and insights Pat provides daily, you're setting yourself up for consistency and for success. Trading is a marathon, not a sprint. We've all heard that. Discipline keeps you in the race.
It's so true, Owen. There's wisdom in your statement. It brings up to an area of resilience and patience. Okay. Resilience. Another word we could use instead of resilience, perseverance. Perseverance. We continue onwards. And patience. There's no penalty for waiting for your pitch. Years ago at IBD meetups, I used to sit there and talk about, look, you got to swing this bat. You've got to swing this bat. No, you can stand up there as long as you want and wait for your pitch. The same thing is true in stock investing. There's no penalty just to wait. Just wait. They can wait for that setup. That's good. So you have to be resilient, and you also have to be patient, waiting for it. At Mission Winners, we're emphasizing waiting for the high probability setups. I post all the time charts of stocks that we bought and own, and there is a common theme on all of them. They're easy to see. It's simple to see. And by so doing that, you're finding high probability and buying high probability opportunities. You're waiting for the right ones and let the other ones go. And the way you get to that point is through practice and discipline with what we teach at Mission Winners, and build mental toughness. Okay. Say, I don't need to follow the crowd. And it's not an ego thing. I'm waiting for my pitch. It's a skill that pays dividends. Okay. And it'll change your life. It's the honest to goodness truth. Turn off the noise. This is a powerful quote, folks. Only the still pool reflects the stars. Focus on simplicity. It will help you psychologically, but it will also help you financially. And it's not just waiting, okay? Patience isn't just waiting. It's about waiting with a purpose, waiting for that high probability setup. And we teach people what to look for. And then you can trust your process and let it come to you. Let the opportunity come to you. That will help you a lot. I'd like to thank Owen and Rich, and I also like to thank everybody who's joined us tonight. What you did tonight wasn't just spending time. This may sound corny. I'm big on these thought processes. We don't spend our time at Mission Winners. We invest our time. Psychology of trading, it's not just a skill. It's the core of what makes us successful. What's going on between our ears? As I said before, the biggest part of what we do is not what is before our eyes. It's what's between our ears. We help you master that mindset for yourself. It's your mindset, your strategy, and your goals. You personalize it. It's not about me or anybody else. All of this is about you and making you better. And always remember this. Trading success is about patience, discipline, and consistent execution. Keep learning, stay focused, and keep finding those winners.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.